All right, welcome to the weekly meeting, May 4th, 2024. Hopefully you guys had a great week. We kind of did an experiment, and I like the results of the experiment. So, the traders that are involved in that experiment, and you're kind of trading a controlled plan. Hats off to you. I like the results I saw. I have to go back to the drawing board. I kind of got off plan a little bit this week, and it's I guess it's more pressure. If you have to do things that you don't normally do, and I don't normally call trades. I don't have a problem with seeing them and taking them, but I don't normally call them. But after reviewing things that happened this week, this coming week it will be 10 times better. And I was 2-2 pretty much this past week, but having 4 trades called on NFP week when I go back and look at it is not even the way that I've operated. When I went back and looked, that's the first time this year that I've had 4 trades on NFP week. So I'll be better. And probably going into last year, I probably never had 4 trades on NFP week. So, it is a lot of what may have happened to you could have been better if I had been better. So this week, I'll definitely be better. But for those of you who doubled up, congratulations. You'll definitely do it twice this week. So what I want to do is kind of talk about a few setups that are popping off the charts, and kind of talk to you about what I'm looking at and my thought process, okay? And why I believe that you should catch 2 trades per week and call it a day. I honestly believe that. I'm going to tell you that I do more than that. But I'm thinking back to my journey, and I'm telling you, I was trading a 50K and a 20K, and I successfully traded those accounts without blowing them, and I was very consistent. And I averaged about 2 trades a week, and I made great money doing it. So I think that when I look at people trading, and I get it, it's exciting. I couldn't trade as aggressively with a funded account as I trade now, but really, why would you need to flip your account more than twice in a week? Why would you need to collect a big bank like that more than twice a week? And we kind of all look at this as, oh man, this is just $100 or $200. So when you flip it the first time, you're $400. That's not life-changing money. You flip it the second time, $800. That's not life-changing money. So we want to run up to the life-changing money. And that's called skipping the process. That doesn't work in anything. I can't do it when I lift weights. I can't do it in relationships. If I try to do it in relationships, y'all say I'm chasing one thing. So let's put to practice what we know works in real life. Okay. Let's back away from Fantasyville, or back away from once in a lifetime things like hitting the lotto, and write down your process, right? The piece of paper that I wrote, a few weeks ago, took $250 to 250K in 10 trades, right? I lost 2 trades this past week and I still doubled up. So I'm still 9 trades away from the account flip. So hindsight is, if I had taken 1 trade, I mean, obviously I would have more money in the account if I just stopped after that 1 trade we took. So next month, those of you who are still trading that plan, if you haven't been kicked out the group, then and kicked out in a good way, but if you're still trading that plan, just take that 1 trade going into NFP and then chill. Allow NFP news to set up your trades for the next week, because that's exactly what we're going to look at now. Right now. Okay, so NFP has happened, and those of you who traded with us, if you had just took the first trade, we caught that EA buy. It did everything that we thought it was going to do, and we all cashed out. If we had just stopped and allowed the rest of the week to take place without us, then you would have that sum that was in your account to take into this week, where you have multiple setups. All right. So oil, I fibbed from this impulse move up. We broke this high, we broke this high, we broke this high. So I personally, because we pushed up here and pulled back, I would rather fib from a higher range, right? But I'm not going to ignore the fact that we're just now hitting the zone if this is where you're fibbing from, right? If this is where you want to fib this move from, we're just now hitting the zone. So we could go all the way down to the 72. I'm personally looking at this range after we pulled back the first time, and we came up and we broke this high, and we broke these couple of highs over here, and now we're pulled back. So we're at the 62, and I believe we're at an area where we're going to see a turn, right? You already know the situation over there in the Middle East. I read something about how the Houthis attacked, 2 naval destroyers and some crap. So I'm looking for price to probably continue up. If I pull up this monthly chart, we banged into this bearish order block, we pulled back, and we've mitigated most of the imbalance. So there's a little bit of imbalance in here. We drop down, and I think that's where price should turn and burn. If you're trading oil, wait for your confirmations. We don't have to rush anything. We don't, we're not up against the clock, and you're going to have plenty of upside, right? Because I think whenever we take off this time, we'll go from wherever we're at, 77, 75, 72, if it pulls back to 72, but you're going to go from there to 90. And there'll be plenty of room to make money if that's what you're trading. All right, let's move on to giggity gold. Okay, I'm looking at gold on this 2-week because it printed a bearish order block. If you trade like I trade, and you might not, I don't give a darn. I'm gonna tell you how I see it. There's no wick on the top of this candle. You already know the powers that be feel like that candle will be roughed up at the top. I'm still going to fib it like this here, like him. And I'm going to expect a pullback, which means I want to see gold come in hot. Maybe that lends some credibility to some Middle East rough up, dust up, or whatever it takes for gold to push higher. It's darn short I'm going to be looking for. I'm personally not taking a gold trade, but this is just what I'm looking at, right? And when you drop down to the 4-hour, you can see all the imbalance. You can see the imbalance that needs to be mitigated. You can look at this, it's price turning. You get a push up, a pull back, a liquidity sweep. I say we'll probably pull back a little bit and go higher. However you see it, make sure you get your confirmations before you just take the buy, all right? So if I go down to the 1 hour, there's a clear chalk for me. Like if you're looking at this as a high or this is a high, even created a high here, then went above it. So if I fib from here to here, my ideal entry would have been the 78. And I just think that at some point, as a group, we we'll start targeting these moves when you see the chalk, right? So you went and draw down. Maybe you would have got wicked out the trade because it violated that low. But if you ever take this wick and you get kicked out of the trade, you got to hop back in, because especially when this wick draws up on you, because you should understand, damn, I was liquidity. Like, I got in a little too fast. I can get back in and price is going to still push up. You got the chalk, you had your confirmations, when this weekly order block closed, or as it was about to close, the view started looking. I always look that second 4-hour candle, the New York shift on Friday. That's the candle that's probably going to give you an entry for the up move. But you gotta anticipate it in order for you to see it. And even if you don't use that candle for an entry, it'll give you another entry tomorrow when the market opens. But in my opinion, when you are on top of the charts, and you're on top of the pair you're trading or the setup you're looking at, you can find great entries, and you can find them before the masses come to the charts to look at the move. So I like that about gold. I think that's where the price will end up coming up into these areas. There's some equal highs here right before the 78. There's still imbalance after the 78. Remember, this candle didn't have a wick on it. So maybe we go all the way up. Maybe we go all the way up here. I don't know. I don't really trade gold like that, but I'm just telling you what I see for it's a longer range, like a swing trade, right? Because this is a 2-week candle. Maybe it happens over a 2-week time period. Maybe you get a 2-week green candle and then a 2-week red candle that comes back down, because I do feel like gold needs to go further down. Let's go back to that 2W. That 2W. So I feel like gold still needs to come down. If you fib from here to here, we're going to look at this consequent encroachment, because I had some questions about that. Okay, even if you believe in consequent encroachment, which means filling 50% of that imbalance, you can see that this candle didn't push far enough into the imbalance. So I feel like we're going to get a push up, and we still need to come at least to this 50, right? Now, I personally would like us to tap into this order block and test the moving average. And if you are a trend line trader, one of those clowns that uses trend lines, you could you can put your trend line on, and you want to see price respect your trend line or touch into your trend line, and that'd be cool. So that's kind of a higher time frame view, and obviously there's more imbalance if gold broke down further, may or may not. I don't know, but if you're trading it, you should kind of look for these marks. And if I go to the monthly chart, of course we're at all-time highs, but this month gave you what some people would term as a gravestone doji. I don't know, a shooting star, which can lead to the market collapsing. You see the imbalance in this monthly candle. Maybe we're going to address some of that imbalance. Just be awake and aware of what's going on these higher time frames, so you don't get ran through like some butter, and gold is the hot knife. You just understand that price could be pulling back to fill this imbalance. It could be pulling back to retest this high or these highs, right? So if I were you and I trade gold, I would probably mark these areas, especially this area right here with this red candle, because that's an order block. And it hasn't been mitigated. Not to say that it has to be mitigated on this pullback, but maybe if this thing collapses far, which I can't imagine, but that's a long way to collapse. You just never know. All right. Any questions on that? Cool. No questions. No, any questions for real? Okay. 35,000 foot view of the US 30. Whether you trade the way I trade or not, my way would have got you paid this time on US 30. We had the close of the monthly order block. You had just filled this candle. Price came right back to your zone. You didn't have to argue with me about whether you thought it was going to keep selling or not. It came back to the zone. It's probably going to go higher, to start the week off. If you drop down to the 4 hour, you see that we're at an imbalance, right? Looks like we're right at the breaker block, but it printed a bullish order block, which tells me that it's going to push through probably this bullish order block. Here's equal highs right here. There's imbalance above there. Pretty high likelihood that price will push up. I have a hypothetical place that I would look for sales right at the top where you got all that imbalance where it first started breaking down April 1st. So maybe we pull back all the way up there. Why would we pull way back up there, Todd? Well, we broke some swing lows, right? When you break your swing lows, you expect price to pull back. So if you fib from the top to this bottom, then you will get an area that you can probably look at for the pullback to pull back to. And if you don't trade on these higher time frames, that's fine. All I'm saying is I would be cognizant of the higher time frame move. So when you're trading on these lower time frames, you understand that we're in an uptrend probably, until we get to the 78. Or you can just stay out of it because we're in the middle. We're obviously in the middle. Maybe you missed your entry way down here. You didn't recognize this push up and pull back as a chalk. Next time you should. You say, oh, we got a chalk right there. I can get in and ride it up. To where? To the 50, to the 62, to the 78, to the 88. If you're one of those people, whatever your trading style is, make sure you're maximizing it by getting in on the edges, right? And after the chalk, you're going to get an entry on the edge. That's how you get in on the edges. Any questions about US 30? NASDAQ is going to be the same, the exact same setup. If you go to the monthly joint, the NASDAQ is pulled back, further than the US 30. But I do think that we still got a little bit to go on the nasty NAS. We still have we got an order block that's not been touched. We have imbalance up here. So, if you do your homework, it'll probably push up somewhere. It'll give you a bearish move. Maybe you're not interested in taking the buy. Maybe it's too late. Maybe you don't know how to drop down to the lower time frames and catch the pullback for the buy. However you decide to do it, if you're interested on the sales of these indices, because I would think that they would start selling sometime next week, maybe Tuesday or Wednesday. Wink, wink. That's normally when we get the actual move. Maybe you're putting an alert up here and saying, hey, man, when price gets here, I need to be selling. So I'll just put sell it, create the alert. And then when price hits it, whenever that is, maybe it's 2 a.m. on Wednesday morning, maybe it's 2100 Tuesday night, who knows? I expect to push up and then it starts selling. Any of these moves will potentially get you paid. All these indices, same old same, right? Any questions over the indices? That is awesome, people. That is awesome. Okay. This trade I will be looking at Okay, when you trade the dollar, we got a bearish order block for UJ. But but it looks like the dollar, when I look at those indices, it looks like the dollar is going to get weaker first. So let me just look at the dollar before I talk about this, because I didn't look at the dollar. Okay, we got a bearish order block on the dollar, right? Which is no biggie. It's a bearish order block on top of the moving average. So when price pushes up, it has to come back. We got this bearish order block. Price pushed down, took the liquidity from it, and ran higher. You got this bearish order block. Price could do the same thing, push down further into these order block, maybe even push to the wicks. That's the down move I'm looking at for the dollar. And then I think that the dollar is going to get out of here. I think it'll be a bullish order block by the end of next week. That's just my thought process. If you follow my thought process, then when you look at this this UJ chart, because UJ is a pretty good opportunity. 333 pips back to the golden zone. But if the dollar sells, maybe UJ will too, right? Maybe UJ will sell down here to these wicks as the dollar pushes down. Maybe UJ will sell down to this imbalance. That would be a beautiful thing, right? Because that would mean instead of 333 pips, if it comes down here, now you have a 525 pip move back to your zone. And if it keeps going, like the dollar will probably keep going, then maybe you get 700, 1,000 pips. Great move. It'll be a great move. So that's going to be on my list. If you catch a trade like this, you don't even need another trade. You don't need another trade. And maybe this trade lasts till, I don't know, Thursday. Let's say it pushes down first and you catch your buy on Tuesday or Wednesday and you trade this through the end of the week, and then it pulls back a little bit, getting ready for the next week. Whatever the case may be, it's all good. I'm personally not, this would be my second trade or third option or whatever. I don't really like to be buying these JPYs when the price is so high. It's still a good move. I don't like to buy it because I'm not a fan of how they intervene in their currencies. But if it lines up, then it's still a good trade. Let's look at GJ. Another great trade. You got a bullish order block, you got to tap in. I think we're going up here. GJ is like a 400 some pip move. Or 416 to the 50, if it just goes to the 50. Okay, if you look at the 4 hour, right? And if you had any anticipation that this was going to buy, then you probably saw that we tapped in to this blocking down here, right? You got this this order block here. That provided a little bounce. We came and we filled the imbalance and we hit that order block. I know y'all. I know. Let me do it so you, because I don't want y'all asking me no crazy questions. Now it's an order block, huh? Y'all see it? So you hit this order block and we got the bounce, right? So all we need is for a break, a pullback, and a rollout, right? If you were anticipating that GJ was needing to buy next week, you could have caught the trade when it hit that block and started pushing up. Maybe you caught it on the 15-minute. There's nothing wrong with doing this. Maybe you caught this bounce and maybe you caught this order block and it pulled back and you got in the trade and rolled out. There's nothing wrong with that, with anticipating the move as you see it happen. You know that it's Friday, right? You know that this trade has to push up. It's Friday. This happened at 11 o'clock or 10 o'clock. Your 11 o'clock move gave you a push up and a pullback, a chalk on the 15-minute, and then the price started pushing up. So if you anticipated that GJ was going to buy next week or any of those JPYs, then you could have been looking for these moves the second part of the day on Friday. And this is, I get it. Maybe this is a little bit complex for 80% of the people. But if you're one of those 20% that can understand what I'm saying, this is going to be an every Friday thing for you, right? Because by Friday, that first 4-hour candle, you're going to know, hey man, does this pair have an order block, or has this pair went far enough that interests me to buy the retracement the first part of next week? If so, then you can wait on that second candle. That second 4-hour candle is going to set your move up to go the opposite direction, and you can get in, right? Just make sure you don't have to like load your lots up, because there's always a chance that somebody can fly a plane into a building or something on the weekend and jack you up. So you don't have to load your lots up, but you can get a entry at a decent spot, to take these trades to their rightful destination. All right. Do I have any questions? No, you say. All right. Now for the traditionalis. 2-week order block on EN. 2-week order block on EA. GA. GN. I know we don't talk about these a lot of times, but this trade interests me. So this was a 2-week order block that I've caught. I traded it a week before last, the buy up. It's been hanging out. There's still some imbalance. If I drop down to the 4-hour, there's still some imbalance that could probably get filled, right? But it gave us a 4-hour bearish order block. So price could buy up into this order block and get out of Dodge. And this is a trade that you never have to get out of if it respects, right? If it respects that order block. I personally would wait until I see that it's going to respect that order block, because we're on top of the moving average and we expect a weaker dollar, right? So price could give you a bullish order block out of this bearish situation. It could go bullish. It could go up to your 78. It can mitigate this imbalance and then turn and sell. So the setup is good. You just have to be patient. And this is a trade that you won't have to get out of, because this is a 2-week order block. So once you get into this trade, you can target this low right here and this low right here, right? I would not get out of this trade. This would be TP1 for me, and then this low would be TP2 for me, right? Obviously, you can drop down to your 4-hour because there are structural points within that order block over there, right? If you go and look, there's all sorts of, there's imbalance right here. There's an order block here. Like all of these are going to be respected. You're going to get reactions. So if that's TP1 that we talked about, and we talked about TP2 being down here, just understand that it's wicks right there that we have orders in. So price is going to come down and bounce first. But if you can just hold your trade, I think we'll be in good shape. EU. All right. So EU doesn't have the bearish order block. And I think it's going to push up higher too. But this trade is the exact same trade setup as GU, right? So I expect it to go higher first, then I expect it to turn and burn. And again, once it turns and burn, these lows are my target, right? These 2 wick lows are my target. So they already told us, hey man, price is coming down here. Let me go up here and gather myself, and I'm coming right back down here. So if I'm getting in this trade up here somewhere, we're just gonna call it the 78. If I get it at the 78, for me, I'm getting 225 out of that move. I'm not budging. I'm not budging. I don't know when I'm going to get paid. It could be on Friday. It could be next Tuesday. I don't care. I'm holding it until I get my 225. So if you're taking these trades, you're probably not going to lose unless something crazy happens in the market. But these are trades that you can take with confidence and you can hold until you get paid. And these are 2-week order blocks, not 1-week order blocks. So maybe it takes you a little bit longer to get paid, or maybe the move just runs, right out and pays you. But if I were you, these moves are probably your higher probability setups. And, they're going to make sure your account continues to grow. For the people who have been trading kind of my style or Kim style, I'm not going to call Kim's trades out. I'll get with Kim, and Kim will call her trades out. I'm only going to call the trades that I would normally take, and I think that's going to better the results. Right? You're gonna get less trades probably, but you're going to get trades that are going to play out. And when she calls a trade out, it'll be her style and her entry and all that good stuff. You guys have any questions? All right, all right, all right. No questions. Okay, one last thing. This will be the shortest meeting ever, which is cool. What I didn't know is that people don't know how to calculate lot size, and that's a problem. All right, so my FX book, pip calculator. We need to get it. We need to put that on our phones. We need to put that on our favorites. When you get here, whatever you're trading, pick a pair. Somebody tell me a pair that they want to trade.
And
Gold.
EU is easy, but that's cool. We'll do EU.
And
EU.
I said EN, not EU.
Oh, okay. EN.
I
EUR.
said gold.
Okay, but we're gonna go EUR NZD first. All right, our account is in US dollars. This really doesn't matter, but just leave it at 1 and 1. Now, when you take your EN and you hit calculate, okay, so today it's valued a little bit more. So it's normally 59 cents, but the value of the nasty Zealand dollar has went up. Okay, so if you're trading in micro lot, you're getting 6 cents per pip. If you're trading a mini lot, a point, if you're trading a 0.10, you're making 60 cents. You're not making $1 like you would if you was trading EU. You're making 60 cents. Therefore, if you want to trade $1 per pip, you're going to have to do a little math. You're going to have to put a 0.10, that's going to give you 60 cents. Now you're going to have to find out which 0, 2, 0, 4, 0, 6 you're going to add to that 0.10, right? And how do you do that? With 7 times 0, 6. 42. So you have 60 cents and 42 cents gives you $1.02. So your lot size would be a 0.17. Does everybody understand it? I think I just lost some people. Did everybody understand that? Please listen, y'all. Don't.
Say it again, child.
No,
please.
can you say it again, Ty? Because I try. Yeah, say it again.
Okay, listen. And yeah, we have to. We're black, man. We got to stop being proud. This what I'm talking to you guys about now is going to change your freaking life forever, forever. I'm not here to judge nobody. I want everybody to get this stuff because this is very important. So let's talk about this lot size, because lot sizes is what's going to make or break you in this business, right? It's going to, if you get into a great trade and you get your 105 pips, but you don't flip your account, you've wasted a trade. That trade is wasted because now you got to go back and risk again to get what you should have already had by risking the proper amount. So this pip calculator is telling you how the value of this per pip. Now, generally speaking, if you trade one lot, this says if you trade one lot for 1 pip, you're going to get $6.01. Y'all see that?
Yes, sir.
But if you trade one lot of GU for 1 pip, you're going to get $10. Does that make sense?
Yes.
Okay.
Yes.
So you understand that there's a $4 difference per pip at that lot size. So it's the same. If you go down to the $1, most of us are going to start with a $100 account. So if you're trading $1 per pip, a 0.10 on GU is $1 per pip, but a 0.10 on this pair is going to be 60 cents per pip. So now you got to add these micro lots together to give you the rest, to give you 40 more cents to add to that 0.10. Okay, so every 0.01 is worth 6 cents. So how many of these 6-cent trades do I need to get to 40? I can say 40 divided by 6, right? And that's going to give me 6. 6 times 6 is 36, right? So I can have a 60 plus 36, because 60 is the 0.01. That's going to give us 60 cents. If I get 6.06s, that's going to add 36 cents to this 60 cent, which is 96 cents. I'm still 4 pennies short. It's okay if that's if 4 pennies short doesn't bother you, that's cool. But I will, in this case, if I know that this trade is going to happen, I want to add them 6 cents, and I'll just take $1.02 per pip instead of $1 per pip. Does everybody get it? Or who doesn't get it? And some people can't get it because of the way I'm explaining it. I'm not the best at explaining sometimes. But all right, this is what we would do. If everybody has paper or your calculator, that 0.10 that you would normally trade as $1 a pip is 60 cents. So in your calculator, put 0.60. That's 60 cents in the bag with that first lot of 0.10. But we have to add, more to it because we want to make more than 60 cents. We want to add these micro lots. I want to add as many 0.01s to that 0.10 as I need to make that 0.10 turn into $1 per pip. So if I have 60 cents and I add 6 cents, how many times I got to add 6 cents to take that 60 up to 100? We need 40 cents. So in your calculator, you can take out, or actually, if you wrote it down, it's cool. In your calculator, you're gonna have to take out the 60 cents. You're gonna have to put 40 cents divided by 6 cents. What does it give you? 6 point something, right?
Wait a minute, you said you would take 40 and then we would divide it by 6, right?
I'm sorry. Go ahead. Because one of y'all at a time. What'd you say, Chair?
I was just saying, you said you would put in 40 cents divided by 6, right? That's what you said?
Yes, but why would I put in 40 cents?
Because that's the difference to $1.
Because that's what you need to get.
That's correct. I just wanted to make sure y'all are connecting the dots. Okay, you're right.
Okay, well, we ended up with 6.66 and a whole lot of other sixes.
Okay, but let's talk about why we use 6 cents. We know why we use 40, but why do we use 6 cents? I just want to make sure everybody understands.
Because that's the micro lot size.
Yes, that's what the 0.01 is worth in this case. Okay, so what is your answer?
6.66 and then
Okay.
a whole lot of other sixes.
So that means you need to use 6 microlots, 6.5 microlots. We can't use half. So if you use 6 microlots, if you use 6 times 6, that's going to be 36 cents. So you're going to add that 36 cents to that 60 cents. So that means you're going to add those 6 microlots to this 1 mini lot, right? Everybody tracking?
Yes.
So
Yeah.
your lot size would be 0.16 because you added those 6 microlots. That makes sense?
Okay.
So your 0.16 is going to be worth 96 cents per pip. Who has questions? It's okay if you have questions.
Wait, I don't know what the question is. I'm not sure.
No, I said, did you understand how we got there?
I'm not quite sure. So I got the fact that a microlot is only 6 cents in this currency, EN.
Okay.
A mini lot is not $1, but it's just 60 cents.
Okay. But I need you to
To get to $1, I have
Mhm.
a 40-cent difference.
Okay, correct.
So I need to add the 40 cents in order to get $1.
Yes, you need to create a lot size that's going to give you 40 additional cents. So how do you do that?
Well, I use the microlots.
Yes. How
We
many?
use micro.
You're right. You do. You're going to do that by using microlots. How many do you need to give you 40 cents?
That would
when
be 6,
divided-
right?
That's when we divided the 40 cents
By the
by
microlot.
6.
Yes.
Yeah,
So how many do you need to give you 40 cents?
divide or multiply.
Well, you can do either one. As long as you know the answer. You can multiply as many as you need, but if you divide it, it's going to give you the answer. If you take 40 cents, because you need 40 cents, and you divide it by this microlot number.
0.06.
So take 40 cents and divide it by that.
That's 6.66.
There you go. So that's how many microlots you need. Now you know you can't use a point on a microlot because you're already gonna have that 0.1. Now you're gonna add 6 to it, right? Does that make sense? Even though that number is a fraction, 6.666, you got to drop the fraction part. You're just going to be able to take that hard.
So do I round up? I will have to round up, yes? 6.0.
I personally would.
Yeah.
I would say I would take one of these mini lots because it's going to give me 60 cents. And then I would take 7 of these micro lots. What is 7 micro lots going to give me? How much is that worth? 7 times 0.06.
42 cents.
So how much, if you got 42 plus 60, how much is that?
That's $1.02.
Okay, so me personally, I would use that lot size, a 0.17, and get $1.02 per pip. Because I believe in the trade. Now, I'm not telling you to do it that way. You can, the safe way to do it is just to use the 6 instead of the 7, a 0.16. That's the safe way to do it. And get 96 cents per pip. If the trade is going 175 pips, it doesn't really matter. You can use a 0.06 and you're still going, the goal is to flip your account in that trade. So if it's going exactly 100 pips, I would be inclined to use the 0.17. If it's going more than that, then it doesn't matter. Both of them are going to get your account flipped. Does that make sense?
I think so. Can you do that same example with some other pairs just to see how?
I mean, you can do it with gold. There we go. Let me see. Let's look at gold. Let's look at gold.
Well, I also have the app on here, which I kept putting on and off because I didn't really know how to use it.
So now you learn how to use it.
Yes, thank you.
So
it asks for, like on the top, it says position size, margin, pip value. At least on the app. So are you on the pip value thing tab or?
I don't know.
Okay.
I don't know where you are on the app, but this right here, you just go to the pip value.
So it's a pip, okay.
So Forex calculator, pip calculator, and then
Pip value.
yeah.
Okay.
So you see it? Does it give you, are you on the screen?
I am on the pip, I'm on the pip value.
Okay. And now what does it say?
It only gives me currency pair, and then account type, standard lats.
Account currency.
It
So
doesn't
look,
give me.
so is it like this? Does it say currency pair and you can pick it from down here?
Yes, it gives me a list.
Okay, so just click on one of them.
Okay, I'm looking for gold.
No, just click on one, anyone. It doesn't matter.
Okay.
Because once it gives it to you, now you can go in this box and you can change it to whatever you want. XAU, USD.
Mhm.
XAU, USD. Get out of here, you weenie. Oh my God. Okay, so are you there?
Yes, I just had to go on my iPad.
That's okay. You said on your app?
Bless you. No, on my iPad, because the app looks way different. Pip calculator. Okay, just continue because I'm sorry, I can't.
No, I'm not going to continue. I'm waiting for you to pull up your deal on your iPad.
It's not looking the same, and it won't like let me pick the whatchamacallit.
So, why don't you share your screen? You want to share your screen?
I am on my computer with the Zoom on my laptop, but I have my my iPad in my on my
Okay.
lap.
So go to your like minimize Zoom and pull up FX book on your laptop. And maybe this will be the way you have to do it in real life.
Okay. Okay. Reject. It looks like I don't have to sign up, yes?
No, you don't have to sign up.
Okay, calculator.
Is anybody else having problems with their app online?
So now it's giving me a bunch of calculators: currency converter, position size calculator, pip calculator.
Pip calculator.
Got it. Okay. Let me see if I see the same thing you see. So I got the value, the currency, which is USD, trade size, lots, pips, one, and then below there's a list of all different pairs.
Okay, so pick gold. So wait. Are you on position size or you on pip value?
I am on pip calculator.
But
You need me to share, or, I mean, I'm not
yeah,
sure.
yeah, I want you to share because I want to see.
Okay. So can you see?
Pip calculator.
And I pick gold from this list down. Oh, no, it's gone.
That's because you picked it.
Yeah, okay. So I got gold now on the pip calculator.
Mhm.
So this says a microlat is worth $10. Okay.
Okay, I think you're on FX calculator, interest rates, pip values. Okay, USD, trade size, one lot, pip, one. Okay, that's cool. Now, your pip value, a standard lot is $1,000, a mini lot is 100, and a micro lot is $10. Yeah. So a 0-1 is 10 bucks. Or that's what it's saying. So this is not not going to be on every broker. So if you see at the very bottom, it says the pip size of 0.01 with current price. The 3 digits represent 3 pips. You see that?
Right here, yes.
So this is telling you that depending on how your broker selects the units, y'all know what units are?
These right here, whatever is behind the decimal.
Well, your broker will tell you how many units is in a micro lot or how many units are in a mini lot.
Oh, okay.
So,
Which is on my MetaTrader, I go
yeah,
into
yes,
into the quotes, and then I pick
there
the
you go.
detail.
So because some brokers at mini lot, it's not going to be $10 per pip. It's going to be maybe $2.50 per pip or something like that. Because if it was $10 per pip, most people, you can't trade gold at a 0.01 with $100 in your account.
Okay.
you need to make sure if your units are down, if this is 100, if your units are 100 units instead of 1,000 units on your micro lot, then that's $1 per pip.
So is the units the same thing as the digits? Because I'm looking at this right now.
No,
And it
we're
says-
talking about units or contracts.
Contract size, I have that too.
Yep.
Okay.
But it's between the broker and whatever gold supplier they're using or whatever, right? Liquidity provider.
Mm-hmm.
If you look at a standard lot, always represents 100,000 units of that currency.
Right here.
Yes, on every currency. So if you have if you're trading 100,000 units of gold, it's going to be $1,000 a pip.
Mm-hmm.
So because these offshore brokers, if you use offshore or some of these liquidity providers want to allow their people to trade these more expensive assets, many times your CFD is not going to be 100,000 units for a standard lot or 1,000 units for a micro lot. It might be 100 units for a micro lot and 1,000 units for a mini lot. So you have to check with your broker. But if it is whichever lot size that says 1,000 units, that's going to be $10 per pip. And whichever says 10,000 units is going to be $100 per pip.
So my question now is on inside the details. It says digits 3, contracts size 100 XAU.
So it's 100 instead of 1,000.
Okay.
But it's $1 per pip.
100 units per micro? No. No.
Does it say that it says that on your contract? That's you're giving me what your broker is saying, right?
Yes, that's what it's saying. Contract size 100 XAU.
Yes. So instead of 1,000. So all you're doing is taking a zero off. So instead of $10 a pip, it's going to be $1 per pip.
Okay.
Is everybody tracking? You ever wonder why on a mini, like if you go to your broker and you trade the US 30, but some brokers offer a US 30 mini? Is anybody tracking? Am I losing y'all? Because the silence is
I never had
No, I'm trying to track with you.
okay. So you never
Yeah,
had.
no,
Listening.
The only thing that's different is the contract size. So if the contract size is smaller from the broker, then they allow you to trade that contract with less money. And most brokers are going to do that because why else would we use them if we couldn't trade the gold or the US 30 or the more volatile stuff? So all this is telling you the breakdown of it. If your broker is saying that they trade a 10,000 unit contract, then that's going to be $100 per pip. So if that's what your standard lot is, I mean, if your standard lot gets you $100 per pip, then you have to be aware of that. If your standard lot gets you $1,000 per pip, you really got to be aware of it because your account will blow up. And here's the second part of gold, right? We're saying per pip, and many of those CFDs are not they're not per pip, they're per point. Like, does your CFD, when you look at your deal, does it say it's a CFD and it's traded per point?
When I look at my what?
The details.
Yeah. Mm-hmm.
Does it have anything about points in there? Like 10 pips per point or 3 pips per point?
On the bottom it says in points, and then the swap, the volume, minimal value.
So what is the point say in points? What does it say?
It just says swap type endpoints. That's all the
But
only
it
thing.
doesn't tell you,
Swap
it doesn't
codes.
give you a pip to point ratio.
No.
So if I were you, I would go to my broker's website and see if they have that. Everybody has it. You just, most people probably don't know to ask about it.
Okay.
Okay, I don't want to get
Thank
off
you.
off the subject. No problem. I don't want to get off the subject, but it's probably going to be more difficult to calculate the CFDs because of that pip to point thing. Hey, Kimmy, that your formula is great, but I don't really understand how you're doing it. And I know you got a 16 or a 0.167, but we can't use a 0.167 in our MetaTrader or our trade locker. We can only use a 0.16. That last digit is not going to be available.
Yeah, it's up to them to round up if they want. So they can do 0.17 if they want.
So how did you do that form? Can you explain your form, the way you did it?
Yeah, so the amount per pip.
Kimmy, sorry. You should share your screen because the picture's not showing for everybody.
It's in the
Oh,
chat.
I'm on
It's
my
in-
phone. I put it in the chat though.
Yeah, everybody look in the chat.
No, I mean like when you open a picture, it doesn't show, and then somebody else said that it doesn't show for them either.
Oh, okay, give me a second. Let me join on my laptop.
Okay, while she doing that, whenever Effie was doing the app on her phone, it's a tab up there. I don't know if she's seen the tab that kind of show position size, margin, pip value. So I don't know if she might not been on the right tab to get to where you was trying to get her to.
I did see the tabs up top. However, I was not able to
To do it. Okay.
add the currency, like the pair that I actually was looking for. I wasn't able to.
Well, I think with gold, it's going to be more of an extended process because every broker contract size might be a little different. When I look at my girl's account at Fusion Markets, because it's a regulated account too, like yours is, Elfie. The CFDs, their CFD sizes are all over the place. And if I didn't know how to look at that stuff, I'd be lost. Because the US 30 is definitely not the same as trading the US 30 with an unregulated broker. And gold, for this one is first of all, you need $100 of margin, but the contract size is 100, right? 100 is awesome because it allows you to trade with a 0.01 and it's not going to kill your account, but you're not making $10 per pip. You're making $1 per pip. Does that make sense? Or no?
Now repeat that because it kind of lost me there just for a minute.
Okay. So if you go to details of gold, it tells you, it says contract size 100 XAU, 100 gold. The one that Elfie had on her screen, her contract size was 1,000, and it's $10 per pip if it's 1,000. The contract size this broker uses is 100, which allows you to trade for $1 per pip. So if you trade it for $10 per pip, you wouldn't be able to trade gold unless you had $1,000 in your account. But because the contract size is 100, you can trade gold if you have $100 in your account. Because the initial margin required to trade that pair is $100.
Oh, okay. So in other words, like it's basically based on your broker to what they allow you to actually get in on. Like when you play the numbers. Gotcha.
Yes, everything is going to come down to your broker, the contract size. You know, if I look at NASDAQ, this contract size is 1. So this is like trading the mini. And it's important for you to know when you look, you know, everybody should always look in the details, because if you don't understand that, then you're gonna waste a lot of time or possibly blow your account. Most brokers aren't going to use a contract size of 1 on an index. Most of them will be at least 10. But anyhow, did you figure it out, Kimmy?
Yeah, I'll share my screen now. So this is the formula. Can everyone see it?
Yep, I can.
Yes.
So the amount per pip and the lot size, I have $100 in my account, so I know my lot size is 0.1 because I only want to risk $1 a pip. So for me, these two top numbers never change. What changes is the currency that I'm using. So if $1 is 0.60 cents for NZD, then I know I'm just multiplying $1 by 0.1, which is still 0.1, divided by the 0.60, which is the 60 cent. And then I get my lot size. And that's all I do. I only do it for Forex. I don't know how to do it for like NAS and US30 because those are different. But I just replace the currency and the amount per pip, the currency exchange rate, and I get my lot size for that pair.
Kimmy, it's
That's
easy.
really all I do.
It's easy to do it for indices.
Oh, well, I wouldn't know. I don't really trade.
Well, who do you use? KOT?
For my challenge,
Yeah.
top step, but I don't know who the
No,
broker is.
no. The hell with them. I'm talking about your personal account.
Oh, KOT Forex.
Yeah. So you would just need to use the mini. If you use US30 mini, you would need a standard lot to trade $1 per pip.
Yeah, so you have to look into that because I need a formula to
I'm
be able to
telling
do
you,
that.
listen, I have an account with them, and I have an account with Oscar. The mini,
Okay.
a standard lot is $1 per pip. If I
Oh,
use
okay. Well then,
if I use a 0.25, that's 25 cent. I don't mean per, I mean per point, not per pip. Per point.
okay. Per point.
If I use a 0.25, I'm going to make 25 cent every point. If NASDAQ goes 100 points, I'll make 25 cent per times 100, right? If I want to make $1 per pip, I have to use a standard lot. And if it goes 100 points, I'll make $100. That makes sense?
Yeah, that makes sense.
So if you want to make $25, if you got the NASDAQ going 100 points, you got to use a 0.25 on the mini. You're going to make $25.
So, I'm sorry.
Yes.
Just to be clear, looking at Kemi's formula, that means I would have to know each currency's value per pip if I like want to trade, let's say AUD CAD.
No, if you do what we did a minute ago and you put in AUD CAD, it's going to tell you what their value is.
Okay.
So for AUD CAD, you would just need to know CAD because we're using USD currency. So you're just converting CAD to USD. So once you find out what CAD is, you just replace it with the 0.60 and then do the formula and you should get the right lot size.
See, she has a whole formula for it, which is cool. When you type in AUD CAD on that pip calculator, the way I just showed you how to do it. In fact, let me go back and share.
So it's always based on a quote then, or is there a rule or something?
Do you see this? Do you see where it says pip calculator?
Yes.
See where I am? Forex calculators, pip calculator.
Yeah.
AUD CAD, right? I'm gonna go down here and type in AUD CAD. AUD CAD. I don't know why y'all use this thing. This pair, I'm beginning to hate it because everybody always uses this pair. This is telling you that one standard lot is $7.30. So if you're using a mini lot, it's 73 cents per pip. Instead of $1, it's 73 pip. Instead of that 60, you put in 73 cents. And then you use that same formula. Or you do it the ghetto way like me. I got 73 cents. How many of these sevens do I need to add together to make the extra 23 cents? I know 3 times 7 is 21. So I use a 0.13. That's what I would use. Or a 0.14 if I feel really jiggy. But a 0.13 is going to, what is 3 times 7, 21, 3 times 3, 219. So yeah, you're going to get a 21, so a 94, right? You're making 94 cents. So I would definitely use a 4. So I would use a 0.14 because if 94 cents plus 7 is $1.01. Kimmy would probably use a 0.13 because she's scared.
That's true.
Would you use a 0.13? Is that what you got?
I would use this. Yeah, I am scared.
I ain't mad at you. That's good. But yeah, I mean, you see how all you're doing is you're going to use a 0.1 because this gives you 73 cents. Now you just need to add as many of these together that's going to give you the 27 cents that you're looking for to make this $1. So take 27 cents, divide it by 0.07, and it's going to give me 3.9 or something. So if you use a 3, you're going to use a 0.13. You use a 4, you use a 0.14, and it's going to be a little bit more than $1 per pip.
Okay.
I think as the weeks go by, Kimmy, I think you'll start seeing which ones you would cheat on.
Thank you.
You're welcome. All right, is anybody still confused? Nobody. So everybody understand?
I understand it now that you went over it, so I appreciate it.
All right, you're welcome.
Yes, same here. Thank you.
Hey, Shajaria,
Yes,
do you understand?
I'm not sure what y'all was talking about when I got in. I was just gonna rewatch the recording when you posted it.
Okay, so you came in late. We were
Yeah.
just talking about how to calculate your lot size when you take
Okay, yeah, I think I understand how to calculate it.
Okay.
For like regular forex pairs.
Yeah,
now,
for regular forex pairs.
Okay, yeah.
But do you understand, like, the value of those other pairs are different than the dollar pairs, right?
Oh no, I didn't know.
Well, so if you download or you go to my FX book and you go to the currency calculator or the pip calculator, right here, forex calculator, you go to forex calculators, pip calculator, and you type in the asset that you're trading. Most of us are probably going to trade some JPY pair. So let's just do one more for everybody's edification. I put in GBP, JPY, because that's what most people are probably going to look to get into. Our currency is the dollar. I'm just going to leave these at 1, right? I want to know what 1 pip is worth. And I hit calculate. This is telling me that if I use a standard lot, it's going to pay me $6.50 per pip. If I use a 0.10, I'm going to get 65 cents per pip. So if I want to make $1 per pip, I need to add some micros to this 65 cents in order to get to $1. So I'll take the 35 cents that's remaining from the 65, and I need to divide my 35 by 6. I know 6 times 5 is 30, and 6 times 6 is 36, so 6 is too high. It's going to be 5 point something. So my lot size will be a 0.15. Is everybody tracking that?
Yeah.
Yeah.
Okay, so when y'all get out here and get jiggy with this GJ trade, you know, if you're trading your trade at a 0.15 and it goes, how many pips is supposed to go?
100.
Huh?
The goal is 100 pips.
Oh, I was gonna say, but the devil's a lie, because I said how many pips is it gonna go to the 50?
Oh, yeah.
Like 300 or something.
Come on, bro. I want y'all to make
I
it up.
think it said
Look, I know y'all
333.
did y'all analysis. How many pips is it going? Somebody tell me how many pips is going to the 50. Don't make it up. Look it up. Brad, I know y'all marked it up on y'all's chart, because y'all was telling me in the chat yesterday. Y'all didn't mark it up on y'all's chart. Are y'all serious? I mean,
412.
but y'all didn't mark this up? You said 412?
Yes.
Please, I mean, this is how we make millions, man. We can't make millions if we're not prepared. All right. So I'm using a 0.15, or maybe not 15. Well, okay, it's gonna give me 15 lots. If I use 15 lots, I'll make 40 grand. If I use a 0.15, I'm gonna make 269.18, so to speak. So everybody see how that works? If
Yes.
I use a mini lot, I'm gonna make $26, almost $27. If it goes 400 pips. Which is why I have to add multiple positions.
I tell you what, it really comes to realization how much you leaving land on the table
Yes.
when you do this, because it's like, dang, I didn't make no but like $20 or $30. You know what I'm saying? After you don't put in all that time and effort and focus and making sure to get it right. Yeah, you have losses, but overall, looking at this, it just goes to show what you leaving land on the table.
Right. But here's what I also want to emphasize. This is what I want to emphasize. We, in this scenario that you make $269.18, you got to understand that when this trade started, your account value was $100, which means at the end of this trade, your account value is $369.18 in 1 week, one trade. Go to the mall, go live your life. The next week, you're going to come to the market. You're going to have a $369 account. At which point, you can use $3.50 per pip. Right? $3.50 per pip. Or just for, all right, just for fun, I need somebody to write this number down. 369.18. Write it down, please. I need who's gonna be my writer down there? Who's gonna be the person taking the notes?
Kimmy volunteers.
I mean, it could be Kimmy.
Was that 369 or 269? I'm sorry, I'm driving.
It's 369. You made 269, but you got $100 account, so it's 369.18. I need somebody to write that
Okay, I'm checking.
because
I just wrote it down.
we're gonna pretend that GJ is gonna go up and then come down this week. We're gonna pretend. There's nothing wrong with pretending. Make believe. So it goes up. Now it's going to come down those same 400 pips, right? Everybody tracking? Them same 412 pips. But this time we gotta change our lot size because now our account is worth 369.18. So we should be using $3.60. Really, we should be using 370, but Kimmy's in the room, so we got to stay safe. We're going to be using $369 per pip. I mean, we're going to use $3.69 per pip. So we can't use 69. We got to use 0.36, $3.60 a pip. How do we get $3.60 a pip? Come on, y'all. This should be easy. All right. We know $1 per pip. I mean, one of these is 65. So how do I get to $3? Let me give you a hint. If a standard lot is $6, half of that standard lot should be $3.25. So we know that already puts us at a 0.50. A 0.50. Right? So 5 times this number is what?
$3.25.
So now we need to add 25 cents by using this. 25 cents divided by 0.06 is what?
Say it again.
25 cents divided by 0.06 is 4. 6 times 4 is 24. Right? So if we know it's a 0.54 should be the lot size, is that correct? Everybody see how we got that? Yay or nay?
Nay.
Okay, nay. Let's go back. We need to come up with a lot size that is $3.60 per pip. $3.60 per pip. We know that one standard lot is $6.50. So we know that we need half of that. We need a 360. So half of 650. This is how I would do it. Kimmy, what? Let me stop. Kimmy, what is the formula? Let's just use the formula. How does that work with the formula?
So how much do we have? You said we have 300 and
$369. We're looking for a $3.60 lot. We got 369.
369. So the lot size would be 3.6, right?
Yes, that's correct.
Yeah, so it'll be 360. Let me calculate it. Wait, what's the it's GJ, right?
Yeah, it's right here. It's
And the amount per pip.
6.5 for a standard lot, or 6.53 for a standard lot, 0.65 for a mini lot, and a 0.065 for a micro lot.
I don't know, this one's more difficult because you already put a number in. I'm still on the dollar, so,
So change your dollar to $3.
okay, so. But it's not $3. Oh, well, yeah, it is, yeah, you're right, so it's $3. Okay, so it's 3 times 0.3. So 3 times 0.3. And you said it's so it's 6 cents?
Well,
The
yeah,
GJ?
yeah, GJ is 65 cents basically.
Okay, 65 cents. One second, bear with me, guys. So it'll be 0.46.
4.6 is not quite it, but I can give you,
0.46?
yeah, it's 5.4 is what it is.
Oh shit, okay.
So here's an easy or a mathematical way to come up with it. We know we want to trade with a $3.60 lot size, right? Everybody?
Right.
Okay. So if you write down 360 or put this in your iPhone calculator, 3.6. Now you're going to divide that 3.6 by your mini lot size, by this number right here. Y'all see it?
Yep.
What do you come up with?
Hang on, I'm entering it now. 5.53.
5.53.
Okay. So I got 5.4, but 5.5, that's cool. So if you use a 5.5, right? Just move the decimal. Remember, if you're going from dollars to a lot size, you got to move that decimal over one spot to the left.
Yeah.
Oh, okay. So that's how you got the 5.5, because you moved the decimal to the left.
Yeah. And I would have said 5.4, but we're going to do 5.5. If you do 5.5 times 6.5, right? And the reason why you have 5.5 is because we calculated that 337. We should never calculate that because we can't put it in your lot size. So we should have just, all right, everybody back up. Let's not take the 337 into account. We're going to divide $3.60 by 0.65, not 0.6533.
$3.60 divided by
0.65.
65. That's a 5.5.
Okay, that's cool. So 5.5, $5.05 times 0.65 is what? 5.5 times 0.65 is what?
5.5 times 0.65. 3.575.
So that's $3.57 per pip, which is fine because that's what we want. We actually want 369, but 357 is cool. Is everybody tracking that? You're going to make $3.57 per pip with a 5.5. Who's lost? Who's still lost? Okay, so now we have the lot size. I have a feeling that people are lost, but we're going to use 5.5. We're going to use 412 pips. How much do we have in our account, Kimmy?
369.18.
Well, thank you, Kimmy.
I'm sorry, but I wrote it
I'm
down.
joking, I'm joking up. Okay. So if we traded that, if we traded that 5.5 back 400 and some pips, then we made, with that trade, we made 269, 269.18. So we basically, we missed our mark by $100. Right?
Yeah, unless you got a second
No, of course,
entry
we're
with
talking
half
about what,
of it.
but we're talking about one entry. We're talking
But
about,
I'm saying with half of the lot size, I wouldn't go full all in with the full lot size on the pullback in the second
hey,
entry.
Sherry,
I know I'm just messing with you, Ty.
hey, I would, if you stick to the plan, you're gonna make it to the goal. When you deviate from the plan,
Exactly.
the goal gonna go out the window. So if you traded that 5.5, you still made 269.18. So 269.18 plus how much did we have? 369?
Mm-hmm.
What's your account size?
$638.
And where did we start with at the beginning of the week?
Wasn't it 100?
$100. 6x. On to the next week. You see how one trade made you $600? One trade.
So,
That's
but that
right.
was the trade up and down,
Well,
right?
yeah.
You said?
Yeah.
Mm.
One trade. Now, we can't reasonably expect that to happen with GJ this week. Okay. Now I'm just want to do this in kind of recap. We can't expect for GJ to go up and come down because it's not a order block. It's not an order block. GJ is just a bearish candle that didn't complete. If this would have been an order block, then you can expect it to go up and come down. In this case, you can only ride it up, and then you need to look for your other trade. But if you were trading something, like this, and you bought it up to sell it down, that's exactly the type of move.
We don't see your chart. We see Google Translate.
Okay, can y'all see it now?
Yes.
All right, let me go back to GJ. GJ is not an order block, right? On the 1 week, GJ is just a candle that went down. So we're just taking advantage of all those pips to sell it back. I mean, to buy it back to the 50%. Now, if you go to an actual pair with an order block, what I just showed you, you take one trade, you buy it up, right? You recalculate your lot size because your account is a different size once you're in your TP area, and then you sell it back down. You just need 2 trades, guys. Like, you don't need any other trades, and you 6x your account. Most people aren't 6xing accounts in a week. You can 10x your account. You can 12x your account with 2 entries. If you had 2 entries going up and 2 entries coming down, you would have doubled that 6x. Well, it would have been actually more than that because your second calculation would have been better. But y'all get what I'm saying. There is a myth out there that says you got to overtrade. You got to hit all these trades in order to grow your account. And that's bull. It's bull. You need a good trade. A good trade a week. A good trade. It doesn't matter if your account started at $300 and you traded with a $3 lot size, you double you're on the way up and you double on the way back. But even if you just took one trade to double your account every week, it would take you 10 weeks to go from $100 to $100,000. Assuming that you won all 10 of those trades. And that is the power of doing it like this. Every one of y'all who traded with me this weekend, you doubled your account. Or there was a possibility that you could have doubled your account. So even if you saw it and you didn't execute it, you know that it's very much possible and that it's not something that's over your head. If you catch any move, I'm talking GJ, but you could catch the GU sell. You can catch the EU sell. You can catch the GA buy. Any of those moves, any of these moves, any of them. This is probably going to push down a little bit first, but let's just say it doesn't. Let's just say it buys up. If you catch this buy up and it's 140 pips, 134 pips, you can double your account. We caught 134 pips on EA that when you doubled your account, Chair, right?
Yep.
So any trade that you decide to take, any of these moves that you choose to take that goes 100 pips, your account doubles. If you want to quit trading for the rest of the week, man, quit trading. You want to wait till next week because you can say to yourself, hey man, 9 more times and I'm at 100K. This is not a guessing game, guys. This is just a decision-making game. Hey, I know this is going to pull back, right? I don't need to be greedy. I can trade it to the 50, even though this is probably going to the 62, maybe the 78. I can just trade it to the 50, and I'm guaranteed to double my account. Bruh, the proof is in the pudding, man. So it's out there. If you want to trade like this, I can help you, but you're going to have the control to not try to go from $100 to $100,000 in 1 week. It's going to happen for you eventually, but you have to be the person who's in control and saying, hey man, enough is enough. Selena, are you on the call? Are you still on the call? No.
Yeah, I'm here. What's up?
Oh, I thought you got up, you loser. Did you you doubled your account this week?
I did.
You never double your account. So all I'm saying,
I'm glad I could be the butt of your joke today.
no,
Carry on.
I'm not joking. But everybody knows that you don't double your account. So that's why if you can do it, was it hard? And maybe,
No.
but if you
No,
can,
and I'm sorry.
Well, go ahead. You can speak.
No, I was gonna say no, EA. Well, when we talk, I just wanted to say when you were speaking earlier, the power of the order block. If people don't believe in it, for me, EA this week when we traded was a prime example of that. It did exactly what it was supposed to do with that order block. It bought up, went to the golden zone, and then it sold down. And using that proper lot size and what Todd was just trying to get everybody to understand, that made a difference because
you didn't even sell it down. You just bought it up.
That's what I'm saying. Because I had made what I was supposed to make for the week. My goal is to double my account. I'm not trying to make all the money in the world.
Selena.
I just want to make what I'm supposed to make. I doubled my account and that was that. And I'm good. That's it. That's all. I move on. And if I keep doubling every week, in a few weeks, when we get to that 250K goal, then before that for sure. But you know what we're saying. What I'm saying, I can start taking money out, but I ain't trying to get all the pips. I just want 100 pips. That's it. That's all.
Tell Selena, that's right.
So
and then share and the power of the lot size is everything because I am the 0.01 queen. This is the first time that I really stayed true to all the rules. I've traded the lot size that I was supposed to trade. So with EA, I think it was $1 is what 0.1.63 or something like that. So I made sure I was trading what I was supposed to trade to get what I was supposed to get.
And y'all know Selena don't trade like that. So all I'm saying, guys, is you know, it's possible if you want it to. You know, like you'll be the person that decides whether or not this works for you. And you know, maybe it will for some, and for others, maybe you'll stick to doing what you're doing. But if you want results, man, that's it. That's all. There's nothing secret about it. It's one trade and go about your business. Everybody has a grade A setup. And I'm gonna tell you now, each does all the work. Each does all the work. If you're not doubling your account every week, shame on you. And you are probably just a gambler and you're here to have fun.
Hey Todd, can I add a point in there? And you can't use the excuse I used to use, but I don't got $100. I only had $60 to start with and flipped it.
So, you know, some people use this as
Preach, Sherry, preach.
and some people just gamble, and that's fine. But the success that comes from trading is an individual thing, right? And I've laid out the blueprint, and you know, some of you aren't swing traders. That's cool. I'm a winner. I'm a winner. So if you show me something that's guaranteed to double my account week in and week out, I'm doing it. So, you know, if you're here and you're not making money, that's personal. That's your decision. You've decided that you didn't want to make money. And I respect that. But if you want to make money, this is it. That's it. That's all. It's not secret. If you do that and you do it every week, you pick one trade, you use that trade, and you get out, you're going to win every week. Every week. If you start doing extra stuff, trying to catch extra pips, you know, and I did it last week. I was 2-2. But I still doubled my account. So all I'm telling you is it's available. And most of you guys who took the trades, y'all know it's available, and that's all that matters. Keep doing it, and the results will keep showing up. Every week when you show up, you say, oh man, I've doubled my account again. Oh man, I doubled my account again. Maybe in a few weeks, you will more than double your account. You know, maybe you take 300 pips of the 400. Maybe you get 200 pips instead of 100 pips off of a GJ move or a JPY move. It doesn't matter. Keep doing it and stick to the goal, and you know, you'll keep prospering. Any questions before we roll out? Speak now. Forever hold your tea.
Hey Todd, are you using like default settings on your field, or do you have customized settings on there?
Am I using what?
Like the default settings on the Fibonacci extension?
Well, yeah, so I got my Fibonacci settings from J-Take Profits, but yeah, if you look at the J-Take Profits video, Fibonacci, you type in J-Take Profits Fibonacci, or when you're not driving, if you hit me up, I will show it to you. As a matter of fact, I'll pull up my fib right now. And
thank you.
If you replay this video later, you'll see the settings. Okay. It's nothing fancy. It's the same thing. Only thing that I did fancy with my fib was put these gold boxes around the golden zone. Then I shoot a ray across my 78 once I lay my fib, so I know where the 78 is. But that's it. Nothing extra, nothing out of the ordinary. You know, if you want to change your background color, you can do that too. You can make it clear by fading out this background right here. Oh, if I click it, it comes up. But if you fade it out, it doesn't show up. It's nothing major, nothing fancy. And you know, the funny thing about this is, you never have to argue with anybody. Whenever you fill that order block, you know whether or not you have 100 pips. And if you do, you wait on that move, you set your alert, you're going to double your account every week. And you don't have to argue with nobody. I don't repeat this though. I don't go out in the street and tell people that you can double your money every week because they'll be calling me Bernie Madoff. But you see it yourself.
Thank you. And I had one other question because I'm an alarm type of girl, so I have to like set alarms in order to like, you know, really make it to stuff on time. Because today I was just scrolling and I messed around this phone where you put in the group that we're live, which is when I jumped on. But I wanted to ask, is there like a schedule for when we have meetings and or when we're invited to trade, or is it just a like we feel like it's
Listen, you're in a group, man. Like you if you ever need help, you reach out at any time. Anytime you reach out. You reach out to me anytime, I'm always going to respond. Every week we meet on Saturday at 11 a.m. EST. Every week on Saturday. Every day after the market, we normally have a meeting. On Monday, it's kind of iffy. Tuesday after the market closes, we meet. Immediately after the market closes at 5, we meet. Maybe you're working. So on Thursday, we have a meeting at 8 p.m. Eastern time. So you can catch that meeting if you want to. But anytime you need help, man, send you know how to go to the person's name and send them an instant message.
Yeah, I do.
Send me an instant message. Send Kim an instant message. Send anybody an instant message. This is a free group. If you need help, ask for it. Many times we don't know, you know, what you actually need help with. So if you don't ever reach out, then we won't ever know.
Okay. Thank you.
No problem.
Todd, I have one last question regarding my broker, because you said I should check on my broker to see what the units and stuff are. Yes?
Yeah. That is what I said. Yeah. Yes,
I
ma'am.
wonder under where I could find it, because I'm not sure.
I don't know, but I got a question for you, Elvin.
Hmm.
What are you're looking at for gold?
Yes, for gold as well as for the JPY pairs, because I like to trade EJ as well and GJ.
What I mean, you don't need what information you need for the JPYs
Well, then for gold.
for gold. So Elvin, my personal account, I have a personal account. I started in the end of November, $100 in my personal account. You know what my personal account is right now?
Tell me all about it.
215K.
Ooh.
Elfie.
I'll be like you when I grow up.
But Elfie, I ain't traded no gold.
Thanks.
I ain't traded no US 30.
Tell me,
Listen to me.
don't
Please.
trade gold.
Please listen to me. I've not placed a gold trade. I've not placed a US 30 trade. I traded pairs. So my question, or whenever people start talking to me about the fast moving stuff, and I ran up 200K on a person. And listen, I haven't even been trading I don't put 200 lots like I should, because I'm not there yet, man. Like I can go 90 lots. I can use a 50 and a 40. I can use a 50 and a 50 every now and then, but you're going to get to a point where you're going to hit a ceiling with your comfort level. But the point I'm making to you is everything that we've talked about on these calls and when you're helping people, they're all pairs. So 10 trades using pairs. That means in 10 weeks, you can have a 100K account starting with $100. And you can go a lot faster than that if you know what you're doing. But I'm just saying 1 trade per week, every week with 100 pips is 100K in 10 weeks. Now, obviously, all of these trades we're looking at are going to go over 100 pips. This is going over 100 pips. GJ over 100 pips. EJ, UJ, all of them over 100 pips. So if it's me and I'm not profitable, I'm just going to stick to these pair. Gold is cute. US 30 is cute. It's a lot of cute pairs, but I'm sticking to the ones that are going to flip my account every week that I can control without even second thought. I know it's boring. It is. I can't lie. It's boring. Is it boring, Selena? Cherry? You don't get to do anything. You click buy.
Money is never boring.
Well, but I'm just saying there's no clicking involved, right? After you
Right.
click the button, you're done. So,
But you go on with your life. There's
well,
no
I
stress.
know, but most people who are trading are doing it for the adrenaline rush, whether they admit it or not.
Oh, okay. Oh, I don't care about none of
You're
that.
not going to get that. You're not going to be clicking buttons. You're not going to be on charts. It's either going to hit your TP or stop loss, and it's cool. Either one is cool. So you're not getting any. It's not for adrenaline junkies. Once you're in that trade, it's going to be boring until it finishes. Of course, you might get excited because you're winning. But the problem with this strategy is it's not a lot of activity. And people need activity. Most people who are trading are doing it because they're gamblers. So
They need to step back in the childhood days and read the tortoise and the hare. I'm just saying.
I agree, but it's not a lot of activity. But if you can do that, you're going to win massive amounts of money. The week five, when you're making $8,000, it's too much money. You're not spending $8,000 a week, but you're going to be making it. Week 4, when you're making $4,000, that's a lot of freaking money. If you just stick to the process, if you start with $100 and run it up, $250. If you start with $250, week 4 you're gonna make $4,000. Week 5 you're gonna make $8,000. Week 6, 16. So I know y'all. It's hard to believe. It's hard to fathom until you freaking do it. Until you do it, it just sounds like whatever. But trust me, it works. Any questions?
Oh, Ty, I want to make one more comment. Remember at the beginning of this week, we started off with the thought of trading GJ, but we didn't. So you got to also be in that mindset to switch up and not be locked in on one particular pair when you have more than one option. Just like today, you gave a bunch of different options. So we were supposed to trade GJ, but we didn't.
So, okay, and I'm glad you brought that up, because what you should do is analyze 2 or 3 pairs. If you start off the week and that pair does something different than what you've analyzed it to do, you throw that son of a gun in the trash. Don't trade it. Trade something different. That is why GJ, man, at the first of the week, GJ went like 600 pips in the sky. Or wait, 250 pips in the sky, and then 600 pips drop. Yeah, it would have been great to catch those moves. And one of them, we were on the call when it dropped, and I knew it was probably going to drop. I didn't know it was going to drop auto pips, but we knew it was going to drop. But the point is, it was off schedule. It did something different. So instead of leading people into that, what could have been a slaughter, let's look at something different. Oh, here's EA. EA is doing exactly what I thought it was going to do. Let's take the EA trade. The EA trade only offered like 137 pips or something like that. But it was enough to do what we had to do. So I took the 130 some pips. I thought coming into the week, I was like, man, we're going to get 300 pips on GJ. Selling. And it went up 250. That was the first move. And it wasn't going up slow. It was like bang up, bang. Like it was moving like a pinball machine. So if a pair doesn't do what you analyze it to do, throw it in the trash. Each has a list of like 13 pairs. Bruh, just use something different. You just need 100 pips to do exactly what you analyze it to do. Thank you for bringing that up. I forgot to even mention that. All righty, guys. It's been real.
Appreciate it, Todd.
Thanks, Todd. Happy trading, everybody.
See y'all in the market
you.
street.
Thank you, Todd.
Thank you.
Thank you.
Thank you.
Thank you.